Good evening, ladies and gentlemen. Welcome to Timing and You, where timing is everything. Thank you for being here on time with us for this webinar. My name is George. I am, of course, an entrepreneur, investor, and the business development associate for Timing and You, and I will be your moderator for this evening. So for those of you who are here with us early, thank you very much for being here on time. We would like to allow 5 to 10 minutes to allow all the participants here today to join into the webinar tonight. Now, of course, for those of you who are on Zoom, thank you for logging in. I believe Zoom is already full. So for those of you who do drop out, please do go to our Facebook page where it's also being streamed live on Facebook. There is no limit on Facebook. So for those of you who are already here, thank you very much for being here as well. And of course, I would like to just very quickly give you some opening house rules for those of you who are here while we are awaiting for the participants to come on. Now, of course, for those of you who are here, please be reminded that this seminar, no photos or videos, recordings is allowed. And of course, because there's a lot of content to be shared here today, we would love to have your full attention. So please do put your mobile phones away so that you can provide your full attention to tonight's speaker. Now, of course, for those of you who are in Malaysia and Indonesia, I would like to encourage you to add our customer support numbers, which is the +6018, which you see on the screen. And for those of you who are in Singapore, please add +65. So in the event of any technical issues that you may face during tonight's session, or if you just want to direct a question to the speaker tonight, you can do so if you are unable to do it through Zoom or Facebook. Now, of course, for those of you who are in Zoom, who have managed to come on to the Zoom call, if you do drop out and you find yourself unable to join back the Zoom, not to worry, head over to our Facebook page, Timing and You, just search for Timing and you shall find us, and this will be streamed there live as well. There's only about a 1 second delay from Zoom to Facebook, so you're not missing out on much or at all. And of course, if you do have any questions, you are free to ask them during this session as well, whether you are on Zoom or on Facebook. Please put your questions when you have them. And during the end of the session, when we have some Q&A, if we have time for it, I will be helping you to ask those questions to the speaker. Now, for those of you who are on Zoom, please do notice that there are a couple of buttons that you should pay attention to. Number one, please ignore raise hand. We are not using these functions during this session. Now, for those of you who just want to respond to some of the comments that the speaker has made, or you just want to make a casual comment to us, you can use the chat function. But if you want to ask a question here tonight, please do put it into the Q&A box so that we do not lose track of the questions, because these questions, if the chat box keeps getting flooded, we will miss out your questions. So please put them into the Q&A box when you think about them so that you don't forget. Even if you're not sure if he will respond to those questions, please do put it into the Q&A box anyway. So if he answers, I will indicate as answered. And of course, if you are in Facebook, please do put your questions into the Facebook chat. Our colleague will be sharing those questions with us as well. Hi to all of you who are here early. Thank you for being with us here during this session. Now, for those of you who are, obviously most of you are first time with us, tonight's going to have a lot of things to talk about what Timing You is looking at, which is about forecasting the market. And of course, I think that's a very relevant a topic for a lot of you, as we are all facing a very critical issue, which of course we're still reeling from surviving in this COVID-19 pandemic environment that we are in. And you know, there's been a lot of talks over the last few weeks about a possible vaccine, which has been affecting the market up and down. And I think that we're all hoping for a vaccine, but given that even if a vaccine were to be developed, there's going to be a lot of uncertainty in the market still, as vaccines take time to roll out. So of course, we still want to see how we can navigate the market, not only for the next 6 months, for the coming 2 to 3 years, as we believe that you will be seeing probably the biggest recession that we've ever seen. Now, of course, many of you know we are already more or less in a recession right now, but to us, this is still a preview. There is still more to come. So tonight's session is going to be very, very interesting. We'll give you a bit of background on that as well. So for those of you who are here, thank you very much for being with us here today. I see a question in early, and how does the current situation show similarity to that in the Big Short movie? The answer is it's not. It's a very different condition. So, and that's one thing that you should know about. The reasons for a recession is different. The only similarities is that when there is a market recession, you have an opportunity to short the market, and that's where the similarities might lie. And that's where you can make a lot of money when people are losing money in the market as well. So that's one of the tools possibility. But other than that, the scenario, the situation, the reasons for a recession are not the same whatsoever. For the rest of those questions, which is related more to the market, I believe that will be taken by Derek later on. So please do keep your questions coming as well. Now, of course, the time now is exactly 8:05. We would allow for 5 more minutes for people to get onto Facebook Live. So for those, so that nobody misses out all the content here today, or probably just another 3 to 4 minutes would do, I suppose, as the full room will be full in Zoom. And for those of you who just joined us, thank you. Welcome for being here on time. We are beginning shortly as we await for the participants to come onto the Zoom page or to the Facebook Live page as well. Now, for those of you who are here already, I would like to again draw your attention to our customer service numbers. For those of you who are in Malaysia and Indonesia, please add the +608 number, 6018 number. If you find that you have any issues, you are unable to give us a message. And also it's for us to kind of keep you up to date. If you want to know more about what we do in future, that's the number to add. And of course, for our friends in Singapore, please add +65. And for those of you who are on Facebook Live, if you do face a dropout here tonight, please do head over to our Facebook page. Please like our page so that you can follow it and you can find it easily. Just search for Timing and you shall find us on Facebook. And this particular webinar being streamed live on Facebook Live as well, especially if you find yourself unable to come onto the Zoom call after that. Now, of course, if you have questions today, not to worry, whether you are on Facebook or on Zoom, we are more than happy to take questions, given as much time as we have to provide you the answers that you are seeking. Now, of course, during this session, please do avoid recording this, and because it's only for people who are live, but not to worry as well, because this session will be recorded and will be available on our Facebook page anyway. So for those of you who miss this or miss segments of it, you don't need to fiddle to record it, take a photo or a video, because it will be recorded and uploaded to our Facebook page anyway. And of course, because the content here is probably a bit heavy for many people, please do put your mobile phones away so that you can give your full attention to tonight's session as well. Now, of course, again, I'd like to remind that if you have questions here tonight, for those of you who are on Zoom, please use the Q&A function. We are not using the raise hand function for tonight. If you want to respond to a question that the speaker has tonight, please use the chat button. If not, please use the Q&A for questions. Responding is chat, Q&A for questions, so that we don't lose track of your questions. The moment you think about the questions, please do put them into Q&A. And for those of you who are on Facebook, please put the questions into the chat box. Our colleague will pass the message on to us so that we can ask your questions on your behalf towards the end of tonight's session. Okay, so without further ado, ladies and gentlemen, I think we have given sufficient time for people to come onto this webinar. I'd like to first do a quick opening. Of course, once again, a quick introduction. My name is George. I am the Business Development Associate for Timing and You, and tonight's moderator for some of the questions as well in text as well. So for those of you who ask questions over text, and some questions which are simple, I may assist to respond in text. Please do check back the Q&A box for those questions which has been responded in text. And for those that answered live will be answered by our speaker, Derek himself. Now, talking a bit about our speaker, now one of the things I want to give a background about why we're here tonight is because that very often we find ourselves as investors or even business owners asking ourselves or saying this statement that if I only knew what was going to happen to the market, I could have made different decisions about what to do in the market. I could have made a different trade. I could have did some business decisions that would have capitalized on the market if I only knew. And if we all had the ability to forecast the market, then we would be able to eliminate this from our vocabulary, because we have already taken those actions. Now, forecast is different than speculation. Forecast is using data using analysis, using hundreds of years of historical data to give you a very accurate model on what the market outcome may be like. And that's very different. That's what we're here to talk about today. And our speaker has made a living over the last 21 years using the ability to forecast the market to build and grow his wealth. To give you a very simple thing, our speaker, Derek Tan, made his first pot of gold, $1 million from almost zero during the 2008 subprime crisis, when the whole market was going bearish. He shorted the market, and at the bottom, he actually went long and he made his wealth, riding the recession down and riding the wave back up when it rallied as well. And over the last few years, just to give you a quick snapshot of some of the forecasts he has done, that he has continuously grown his wealth through. He forecasted in 2015 the bottom price of gold and oil. In 2016, he made a forecast that the Dow Jones would hit 30,000. Now, during the time in 2016, the Dow Jones was at around 18,000, and it was already an all-time high. And to call for the market to almost double in a very short amount of years was a very big call. And this call has been documented in various media that he has provided interviews for, like The Edge and so forth. And it was in 2016 that he made that call. And just this year, right before COVID-19, the market reached around 29,000. The Dow Jones hit 29,000, I think almost 600, 500 plus, just 400 plus points away from the 30,000 prediction that he made. And he believes that it will still beat that 30,000 mark in due time. So that's Derek for you since 2016. In 2017, he forecasted the bottom price of Bitcoin. In 2018, when the market seemed like it was going into a bear market, Derek accurately forecasted that it was just a deep correction and it would rally to its point high in January of this year. Now, of course, in 2019, he also forecasted the rally of the price of gold. And at the end of 2019, Derek has already been, talking about a turning point in the market towards the end of January. So in the fourth quarter of 2019, our community has already been looking at the possibility of a turning point. And at that time, as you know, at the end of 2019, the market was rallying very, very strongly in the US stock markets. And he already predicted that towards the end of January, second half of January, that there would be a deep market correction. And true enough, that is exactly what happened. So of course, our community, because having the foresight, exited a lot of their positions towards the middle of and end of January, preserving their wealth, and a lot of people's portfolios were hit very badly, especially at its low last March, right, in March 2020. So these are some of the things that Derek has already helped its community to kind of look forward and anticipate before bad or good things actually happen, and to capitalize on it. Now, of course, Derek, because of his experience, 21 years of experience and 13 years in psychoanalysis, he has been a renowned speaker for many of the financial institutions, these household names that you know in Malaysia and Singapore and in the region. And of course, he speaks on it because he's an expert on psychoanalysis, and probably one of the very, very few people, and probably at the top for psychoanalysis, which is a study of time. And I believe Derek will be sharing about that later in his session. He's also been interviewed by numerous media over the years. This is, of course, his prediction for the Dow Jones 30,000 with The Edge, and he's been talking about this for the last 4 to 5 years since he started timing NU in 2015. So his work has earned him the World Excellent Young Leader Award in 2019 by Yacho Choukan, which is a Chinese news weekly. So that, ladies and gentlemen, is a quick snapshot of our speaker here today. And of course, without further ado, ladies and gentlemen, I would like to ask you all to give your full attention tonight to our speaker, Mr. Derek Tan. Over to you, Derek.
All right. Thank you, George. So let me just switch on to my slides. Okay, so good evening, ladies and gentlemen. Welcome to our webinar tonight. It's sold out, so I'm very happy to see you guys probably across different countries. So probably, if you don't mind, if you're from Singapore, can you just in the chat box you key in 1 if you're from Singapore, so that at least I will know where you're from. If you're from Singapore, can you just key in 1? Wow, very good. Quite a number of you guys. All right. So if you're from Malaysia, can you just key in 2 so that I will know? Oh, very good, very good. Also a lot of Malaysian. Anyone from Indonesia? If you're from Indonesia, can you key in 3? If you're from Indonesia, can you just key in 3? All right, good. So if you're from outside of Singapore, Malaysia, Indonesia, can you just key in 4? I don't know where you're from. If you're out of Singapore, Malaysia, Indonesia, can you just key in 4? All right, good. All right, I believe a lot of you guys have been listening to a lot of webinars, especially during this 2 months of MCO and circuit breaker. I believe you guys have been listening to a lot of talks. A lot of people, they came out and talk about the markets, all these things. It could be some veteran, it could be some people who are very new. So actually, when I was preparing for this webinar tonight, I was thinking, wow, with so many people out there giving their own view about the financial market, what I can give to you guys, so that probably after this 1 to probably 1.5 hours, you guys can gain something valuable. Because I don't wish to waste your time, your 1 to 1.5 hours, because you could have spent your time with your family members or even watch other webinars. So I'm really grateful that all of you guys are here, and we are all sold out. In case for those who can't make it, in case your friend who can't make it, please apologize to them. I will try to do this more often, all right, provided I'm not traveling, all right? So now, ladies and gentlemen, so I guess for tonight, what I'll do is probably I'll walk through what the experience I have as a full-time trader since 1999 until now. That's for the last 21 years, and where I see for the next 3 years where the financial market is going to head. I'm here to tell you guys it's not going to be pretty. COVID-19 is just a preview. We are going to see something even more drastic or worse than COVID-19 in 2021 or 2022, all right? But before I go into that, disclaimer, whatever I shared this evening is only for information and education purpose only, all right? It is not a recommendation or advice to go, to ask you go and buy into any stock or ETF or any asset classes, or do take note, all right? This is very important. Please take whatever I say as for information, and for you to do further analysis, then make an informed decision for your own self. This is very important. All right, next. Sorry, my slide is stuck. Let's try again. Okay. So then for tonight, I believe, like what I say, you all heard of a lot of speakers webinar. They have their own definition of time frame. For me, I also have mine. So for the sake of tonight's webinar, I'll just share you guys, whenever I mention short term, is anything less than 1 month. So it could be a few weeks, a few days, or even intraday. So that's what I meant by short term. Intermediate term is from 1 month to less than 1 year. Long term is from 1 year to less than 10 years, and ultra long term is 10 years or more. Also, just to let you guys have a gauge, because I travel a lot, in fact, more than half of my time, I'm a Singaporean, in case you guys don't know. More than half of my time is actually not in Singapore, because I travel a lot. It's just that because of this COVID-19, I've been stuck in Singapore for the last 2 months. I hope by the 1st of June, more easing can be, more restriction can be eased, so I can travel again. Also, for me, because of my extensive traveling, I tend to be a short to intermediate term trader. I tend to be a position trader rather than every day do intraday trading or do scalping. All right, so do take note of that. Okay, so probably let me just walk through you guys what I went through as a so-called for the last 21 years. All right, this is something very interesting. I actually graduated from NTU for Singaporean or even Malaysian, probably you'll know, Nanyang Technological University. I graduated with a degree of Bachelor of Engineering in Mechanical on the 2nd of July 1997. If you guys remember, 1997 is actually the start of the Asia financial crisis. And I just want to say, I just passed with a merit. I don't have first class, second class, or even third class. I just passed with a merit, that's all. All right, so I'm a very ordinary person, all right? As ordinary as anyone that's out there walking on the street, all right? So now, ladies and gentlemen, so 1997, I went on to become an engineer for 2 years, in fact. Then during that period of time, I realized as an engineer, didn't really make a lot of money. And if I want to be rich or financially free, it's going to be tough. So I actually looked around for so-called ways to so-called increase my income. Also, then very fortunately, I chanced upon the stock market. And of course, I learned from very good mentors. And since 1999 until now, 2020, for the last 21 years, I've not been working. I've been so-called self-employed, or even nowadays, I'm a businessman because I'm running this company called Timing and You. So I'm lucky. In fact, really, apart from the hard work that I put in, I got to admit I'm lucky that I've been able to survive for the last 21 years in the financial market. As you all know, a lot of people, they probably started off to be a full-time trader, but they didn't manage to do so. And probably they went back to work. But fortunately, I've been doing it for the last 21 years. All right, so probably to show you guys what I went through. So this is a chart of the S&P 500, which is one of the indexes in US. So in 1999, yes, after 2 years of being an engineer, I quitted my job. In 1999, I became a full-time trader until right now. All right, of course, year 2000, I went through the NASDAQ bubble. All right, and 2001, of course, we had the 9/11 terrorist attack. And 2003, of course, we went to something similar to right now, but less devastating is what we have the SARS in 2003. All right, and something magical happened in 2007. From 1999 until 2007, I've been trading the market because I learned from good mentors, all these things. I've been able to make a living not only for myself as well as my whole family. But something magical happened in 2007. All right, that was when I chanced upon this form of analysis called cycle analysis. All right, I believe a lot of you guys know that actually there's technical analysis whereby you look at a price chart, or there's even a fundamental analysis whereby it's also known as value investing. All right, made known by Mr. Warren Buffett. All right, and in 2007, I realized, there's actually another form of market analysis known as cycle analysis. And with this cycle analysis, what is it? Cycle analysis, or in short form CA, is actually a field of studying in analyzing recurring pattern and periodic repetition to forecast timing and turning point of different investment asset classes. That's why, remember earlier, George talked about in 2016, I forecasted that Dow Jones is going to hit 30,000, etc. All this thing. It's not because I have a crystal ball. It's just that I know this form of analysis called cycle analysis. In fact, I actually went to Europe and US to learn from my master in cycle analysis, and she brought this form of analysis back to this region. So I would say I'm one of the very few. I wouldn't say I'm the only one, but I'm one of the probably very few who know about cycle analysis and talk about or even train the public about cycle analysis in this region. All right, do take note. CA, with CA, we can do forecasts, the timing and turning points of different asset classes, which I'm going to show guys later on. All right, so that was in 2007. I chanced upon a cycle analysis, and because of cycle analysis, at that point, I get to know that there's actually a 7-year sabbatical cycle. Also, what is it actually? It says you may sow your field for 6 years, and for 6 years you may plant your vineyard and gather its produce. But in the 7th year, the land shall have a complete rest. So in simple layman term, that means what? That means every 7 year there's a turning point, and on the 7th year we should be taking a break. All right. So this 7-year sabbatical cycle is actually a social political event that is so big that has or going to impact the so-called the global market and a lot of so-called the human being out there. All right. So that was when I discovered the 7-year sabbatical cycle. So when I discovered that, actually went in. Remember that was 2007. I went to do further research. Then I realized something very amazing, which I'm going to share you guys right now. Well, I realized in 2001, of course, we have the 911, remember? Then 7 years earlier, that means you take 2001 minus 7 will be 1994. We actually have a bond crisis. So anyway, ladies and gentlemen, we are currently right now, a bond crisis is also slowly imploding, and I'm saying it's going to so-called implode either next year or 2022. Also, that's 1994. 7 years earlier, that was in 1987. On the eventful day of 19 October 1987, we have the Black Monday, whereby one night Dow Jones collapsed by 23%. All right, so another 7 years earlier is 1980, whereby gold price peaked at USD $850 per ounce. Another 7 years earlier, we have the oil crisis, like what we just happened in March and April. All right, the last one was actually in 1973. And in another 7 years earlier, in 1966, we had the China's Cultural Revolution. And another 7 years earlier, this probably applied to Singaporean more. Why? Because in 1959, Singapore have our self-government. Also, I realized every 7 years, this is what we call a fixed cycle. All right, in cycle analysis, there are two forms of CA. One is what we call fixed cycle. For this case, is like this case, every 7 years, it tends to repeat itself. And there's another form of CA which is known as dynamic. All right, is always changing, which I'm going to show you guys later on. All right, so with this, in 2007, from 2001, ladies and gentlemen, so please help me. From 2001, if we add 7, which year would that be? Also, can you just key in the chat box, if we take 201 plus 7, which year would that be, ladies and gentlemen? Simple mathematics, 201 plus 7, yes, correct. You guys got it. So 208, I know that something is coming where I'm stuck with my slides. Let me go back again. Yes, I know that something is coming, 208, but I didn't know what is it because every 7 years there's a turning point. Also, but from hindsight, ladies and gentlemen, we know that what happened in 2008, ladies and gentlemen, it was, of course, the subprime crisis. Of course, Lehman Brothers collapse. All right, so let's go back to the earlier chart. 2008, yes, we have the GFC, the global financial crisis. And like what George mentioned, during 2008, I did a lot of short selling. All right. In case you don't know what is short selling is a form of market trading whereby you sell first at a higher price, then you buy back later at a lower price. All right. And you can do short selling through CFD or even inverse ETF. Also, that's what I did in 2008. I did massive short selling. And in around April 2009, the money that I made, I actually went in. Actually, the market bottomed out in March 2009. I only get in 1 month later in April 2009. I went in to buy a lot of blue chip stocks in Singapore, the banks, DBS, UOB, OC, BC, all this thing. Also, it was during that period of time I made my first pot of gold. All right, I was fortunate. Because of cycle analysis, I get to knew it in 2007. Then I was prepared for something big to come, and I shorted in 2008 and 2009. I went in to buy a lot of blue chip stocks, and That's how I make my first pot of gold. All right. So then in 2011, we have the Europe crisis, whereby Greece nearly collapsed. All right, and we move on. 2015, we have a stock market collapse. We have a currency decline as well as terrorism. All right, if you remember. All right, and very interestingly, in 2015, I founded Timing and You, on this current company. And the next year in 2016, on the 26th of September, 2016, I called for the down zone to hit 30,000. At that point of the time, as you all can see from this chart of down zone was September 2016. It was about 18,000. It was about 18,000. All right. So, but because of cycle analysis and the research that I do, I'm able to call for 30,000. In fact, down zone hit 29,568 on the 12th of February this year. All right, and it actually went up 64%. So whoever my Timing and You so-called member who follow me, we are all laughing to the bank. All right. So that was what happened until the COVID-19, and we have a big crash over here, about 30% drop. Until now, the market has rebounded. All right. So now back. So then in 2017, Donald Trump actually sworn in as a president of United States. And very interestingly, 2018, we have a US stock market collapse as well. Then after that, it rebounded very strongly. In fact, a lot of my friends who are analysts or reminders or dealers, they actually say 2018 was a bear market. But I say no. All right. I say no, it wasn't a bear market. I still insist that my 30,000 will come. All right. So on the eventful day, the next day after Christmas in 2018, if you remember, the US stock market keep on going up and we didn't go into a bear market. So why was I able not to say that it's not a bear market? Just like this time around, I can tell you, even the market have dropped 30% or even 40%, I've not called for a bear market. All right, I'm probably one of the very few who did not call for a bear market, because I know a lot of my friends who are in the financial industry, they call for a bear market in February or even March, but I did not do that. What gave me the confidence not to call for a bear market, which I'm going to share you guys later on. All right, so that was 2018. And finally, in 2020, we have COVID-19 plus the oil crisis. Also, as you all can see, for me, I started in 1999. I went through one big bear market here, which is the Nasdaq bubble. I went through the 2008 global financial crisis, and I ride the trend up. So the thing I want to bring across is this, ladies and gentlemen. For me, because of my 21 years of experience in the financial market, I went through 2 bear market and several bull market. All right. Nowadays, I see a lot of so-called newbies or even young people out there. They start to start webinars and they give their own takes about so-called the financial market. My take is this: this bull market has started in March 2009 for the last 11 years. Probably there are a lot of trainers out there, they may not have gone through a bear market. Also, my take to you guys, if you want to listen to any so-called opinion or any so-called view about the market, probably you should find someone who has actually gone through one cycle of bull and bear. Does it make more sense to you guys? All right, because last 11 years, or if you know how to do it, you probably will be making money. But the best part I can tell you is this, ladies and gentlemen, it is during the bear market that you can make the most money in a very short period of time, which is coming, ladies and gentlemen, or probably is going to be next year or even 2022. That's what I've been preparing my Timing and You members for it. All right. So now, that's why since 2017 and 2022, during this period of time, I coined this term is known as wealth redistribution operation, or in short form WRO. I actually coined it in 2017. All right. So I've been holding on to this view until, and I projected it's going to end around 2022. Why? Because I believe a lot of people, in fact, right now, I have a lot of friends who are doing business. I mean, we all know it's a very sad thing. A lot of business are suffering. All right, and probably we'll see more business collapse probably going forward. All right, so but the thing I just want to say is this. Yes, this is a crisis, COVID-19, but behind every crisis, there's opportunity. All right, that's why I see the opportunity called WRO, and that's why I coined in 2017, and it's from 2017 to 2022. Ladies and gentlemen, remember this 7-year sabbatical cycle? All right, 2015 is already gone, so the next big one will be 2022. All right, so that's why, ladies and gentlemen, get prepared. The next so-called huge wealth transfer is on its way. Remember, 2008, I made my first pot of gold. I was fortunate. All right. In 2008, actually, I made a lot of money. Then, actually, I went in to invest in Singapore so-called properties for investment purposes. But before the turn in 2015, in 2014, I actually exited all my Singapore property investment. Until now, I have zero Singapore property investment. And I'm not going to buy anytime soon, ladies and gentlemen. All right, you can say the interest rate has been low, but my cycle analysis tell me interest rate is going to turn up very soon. All right, so I'm very excited because 2022, the turning point is coming. All right, because it brings me back to my memory of 2008. It was really a very fond memory. All right. So now, ladies and gentlemen, why am I so fond about this WRO? Because I feel that every one of us in our lifetime, we have about 1 to 2 or even 3 times that of opportunity can generate a lot of wealth that can change our life. I did it in 2007, 2009. The next one is what I call WRO between 2017 and 2022. Ladies and gentlemen, if you miss 2017 to 2022, you have to wait probably for another 10 more years between 2027 to 2032 before there's another wealth transfer. Also, my take to you guys is this. Please don't miss the 2017 to 2022 WRO. All right? You'll say, Derek, now it's 2020 already, 2017 gone. Too bad lah. You didn't join, you didn't know about me in 2017. That's why you didn't join me in Timing and You. But that was, remember, the period of time whereby, remember, I called for Dow Zone 30,000 and US stock market Dow Zone actually went up 64%. But anyway, that is over already, ladies and gentlemen. Also, focus on the remaining 3 years. This is my so-called advice to you guys, all right? Because a lot of people during the next 3 years, they are going to lose a lot of money. But as we all know, with Federal Reserve and all the central bank printing so much money, money will not disappear. It is going to be transferred from a lot of people to a few people who is going to get very rich. I happen to be this person in 2008. Also, I hope that I can share my knowledge and experience with more people out there so more people can join me over here rather on the right-hand side. All right, so that's why I call for the 1929. Right now, what we are going through is the biggest wealth transfer between 1929 and 1939. And it's going to end around 2022. All right, so very important with this so-called knowledge, ladies and gentlemen, I'm going to share with you guys the next 3 years, probably some of the things that you should be looking at for the next 3 years. All right, at least to protect yourself or even build wealth for yourself. This is what we call, or what I coin the SDC. All right, so what is S? S is actually US stock market. I'm talking specifically about US stock market. I'm a Singaporean. I have to let you guys know, but I can let you guys know also this. I have 0 Singapore stocks. 0. Why? Because I see a bigger potential in the US stock market than Singapore or Singapore Stock Exchange. All right. And why do I say that, ladies and gentlemen? Because remember, 2016, I called for Dow 30,000. I have not given up on that yet, ladies and gentlemen. Yes, we had a Black Swan event, which is the COVID-19. All right, that happened towards the end of January, and we did have, for Chinese, I didn't really enjoy the Chinese New Year, and the market, so-called the US stock market collapsed. But after that, it rebound very strongly. But during this period of time, ladies and gentlemen, like what I mentioned earlier, I did not call for a bear market. I'm probably one of the very few who insist that we are still in a bull market. It's just that that was a very deep correction. All right. But a lot of people, even the Wall Street Journal, it called for the end of the Dow's 11-year bull market. All right. And there are even people who draw this kind of chart. They say, this is 208, this is 208. And they say, wow, this time around it's going to crash. Like what happened in 208. Some naysayer even go ahead and say, this time around is going to be like 1929, the Great Depression. All right. But I can tell you, until now, all my psychoanalysis, all my financial model tell me we are not going into a 1929 Great Depression yet. Not yet. It's coming, but it's not this time round. All right. Why am I so sure? In fact, I'm so sure that now publicly I'm going to say this again. The next stop for Dow zone is going to be 30,000. But in a short to intermediate term, we are like right now, we are probably going through a correction. But after this correction is over, we will see Dow zone heading to 30,000 or even higher. All right, before this bull market is finally over. All right, I still maintain this view. Then some of you guys will ask, then Derek, then what's your definition of a bear market? So this is my definition of a bear market. Unlike a lot of people out there, they define bear market as a 20% drop from the peak to the trough. All right, ladies and gentlemen, I just want to say this: if it's so easy, any Tom, Dick, and Harry see index drop 20%, then he can easily call for a bear market already. But financial market or the economy is not so simple like 1 + 1 = 2. It doesn't work like that. This is based on my 21 years of experience. Also, my definition of bear market is this: yes, we need to have a 20% or more decline from peak to trough, and we need to at the same time see a significant macro deterioration. Once these two criteria is satisfied, then I would say we will see a much bigger decline, possibly 30%, 40%, or even 50%, provided that these two criteria satisfied. During in April or March, these 20% decline satisfied because the market went through a 30, even 40% decline. I'm talking about US stock market. But I did not call for a bear market. Why? Because I did not see a significant macro deterioration. Then probably you guys out there will start to think, then Derek, then how do we know when will we see, or what is a significant macro deterioration? All right, this is where my proprietary timing and yield relative risk index, or RRI, or this my TMY timing and yield proprietary tool, short form RRI, come into the picture. Also, let me share you guys our RRI. What is our RRI? It actually combines fundamental analysis, technical analysis, and cycle analysis. Altogether, I included 14 major FA, TA, plus CA indicators. And within these indicators, there are 47 sub-indicators looking at all the FACA and technical so-called aspect of the market. All right, ladies and gentlemen, I just want to say this. As an ordinary person, there's only so much we can so-called take note of the indicators. But because of my RRI, I'm able to so-called combine these 47 variables to come up with a very simple chart, which is this. All right. First, you can see we have a green, yellow, orange, red zone. So my RRI is actually this black line over here. All right, this black line over here. So, and it's stretched from 1999, the year when I started being a full-time trader, until right now. This is until April, because I make use of the closing price of all the indicators, the monthly closing price, to generate so-called this so-called RRI line. All right. So how do we read this line? Very simple. Once we are, my line is actually in the green zone, it actually means in technical term is extremely sold. All right, so it's a good time to go and buy stocks. Anyway, ladies and gentlemen, this RI line represents the risk level of the US stock market. It's not bond market, not commodity, not currency, specifically the US stock market. And US stock market affect the global stock market. Also, it's very important to assess the risk level of the US stock market. All right, so when it's in the red zone, it actually means it's very extremely overbought and the market is due for a correction, or it may turn into a bear market. All right, so can you see this red line over here, this horizontal red line? My take is this: once my RI break below this red line, at the same time, we see a 20% or more decline in the US stock market index, then I will call for a bear market. Why do I say that? Let's go to the next slide. This is my RI. I overlay it against the S&P 500. All right, also from 1999 until right now, ladies and gentlemen. Also, can you see right now, as of right now, we are at the value of 63.94. This red line, the value is actually 60. All right, so as we can see, it hasn't broken 60 at all. All right, so let's go back to the previous time that the RI actually touched the red zone and it come down and break below 60, like here. All right, so we scroll down, you see actually S&P actually went through a 20% correction, and then it break below this red line 60 mark over here. And can you see after that the S&P actually went into a bear market that's 50% down. Let's go to 2008. Our RI touched a red zone. It came down, break below 60. We scroll down. Can you see at the same time the index actually break below for more than 60%, and then it collapsed to drop further to around 50 to 55%. All right, and this time around, ladies and gentlemen, you see actually my RI actually touched a red zone. It came down, break the 60% mark, right? But the thing is, can you see that was in 2015? 2015. The market did not collapse 20% or more. In fact, the market only dropped by 15%. That's why we did not went into a bear market like what happened here and here. Because remember, I mentioned we need to satisfy these two criteria: 20% drop as well as a significant macro deterioration. What do I mean by macro deterioration? Is when my RI break below this 60 so-called mark. All right. Yes, that's what it did in 2015. But unfortunately, the first criteria of 20% collapse in the so-called index did not happen. So that wasn't a bear market. In fact, the market continued to rise, trend up, and that's why in 2016 I called for down zone 30,000. And in fact, it went all the way up, ladies and gentlemen. So right now, my take is this: I have not called for a bear market yet. Why? Because same thing. Even though this time around we have a 30% drop, but can you see my RI did not break below the so-called this rate 60% so-called mark. Also, even though it went, it came down 30%. I mean, the market collapsed 30%, but my RI did not break this red line over here. So that's why I did not call for a bear market. But later on, when my RI starts to break below this red line, together with a breakdown in the US indexes of 20% or more, then I'll call for a bear market. So now you understand why I have not called for a bear market. And in fact, whoever who called for a bear market in February or March, now they are stuck because they now have to quickly change their tune and say, oh no, it's not a bull, so-called bear market. Some of them still very so-called iron teeth, 铁齿, they still continue to think that this is just a bear market rally. It's going to come down. Yes, it's going to come down probably next year, not anytime soon. All right, so my takes, ladies and gentlemen. Now on the record, I'm going to publicly tell everyone I'm expecting S&P is going to hit 4,000 publicly in Facebook. Like what I did in 2016 when I called for down zone 30,000. I still maintain this view, but right now I'm calling for S&P 500 to hit 4,000. All right, this is what I so-called concluded from my analysis as well as cycle analysis. Then your next question is, Derek, why 4,000? All right, so for this, I probably need to go to show you. For Timing and You, actually we have a website called timingandyou.com. So I'll just log in for you guys to take a look. In fact, I call for this S&P 500. We log in. I just log in for you guys to take a look. In fact, I call for this S&P 500 to hit 4,000 early this year because every month I actually publish a monthly newsletter. So in early this year, in January, during the January newsletter, yes, which is here, I call for S&P 500 to hit 4,000. Let me just scroll down. So in our newsletter, I include our RI and analysis and my market analysis, all this thing. And this is where, as you all can see, I call for S&P to hit 4,000. I draw all the analysis based on cycle analysis. This is a fixed cycle, all right? There's actually a 30-month fixed stock market cycle, which is one of the most accurate in the financial market. And I combine with technical analysis and finally with all the calculation and with my DD7 golden numbers, with all this calculation that I did, finally I arrived at 4,000, all right, as a potential objective for S&P 500 by 2020 and 2021, all right, around this period. Also, so all my Timing and You members already know why I call for all this. Also now publicly, all right, let me just go back to my slide. So publicly, I'm calling for S&P 4,000, all right? And that means S&P 500 is going to hit 4,000 before this so-called bull market is finally over, all right? But the thing I just want to say is this. In the short term, ladies and gentlemen, anyways, let me just introduce, earlier I mentioned there's cycle analysis, there's two forms of cycle analysis. Fixed cycle, which is a 7-year sabbatical cycle, remember? Or 10-year, or even the 30-year, like I just mentioned. There's also a dynamic CA, which is this chart over here, dynamic cycle chart, which was crunched on the 24th of April this year. Because of this cycle chart, I can do projection until end of this year, December. Can you see? All right. So do take note, my cycle chart, it does not have y-axis, it only has x-axis, and this is for the month of March, April, May, all the way until December. All right. So since April 24th, can you all see? I've been calling for a so-called correction in the US stock market. Remember, cycle analysis is about turning point. All right, so I already call for my cycle chart. I already call for a turning point for S&P, as we can see, probably around mid of May. All right, so that's why. But early in April 24th, I already know that is happening. That's why I forewarned my Timing and You members to expect for correction. And the next turning point for this correction probably is going to be around probably early to mid-June. Also, that's why in this short to intermediate term, we are going through a correction. Probably by in June, we should see it turn out. That means second quarter of this year, we should be seeing a low. Probably this is what's going to happen. second quarter, we are going to see a low. Then after that, we are going to see a market continue to go up until probably end of this year or even 3rd of November, when US had the so-called the US presidential election. We will see whether Donald Trump will win his second term or not. At this point of time, I think he will win. All right, so what we are going through right now is a resemblance of what happened in 1987. We are now going through a 1929 Great Depression. All right, it's a different ball game, ladies and gentlemen. All the conditions are different. So don't listen to all the naysayers out there that we are going to go through a Great Depression. No, we are not going to do that. We probably have seen a low in the US stock market on the 23rd of March, but from there on and in short term, we're probably going to have a pullback, but probably in June, we'll start to see market continue to trend upward. So the next turning point probably will be in June. All right, so this is how I see the US stock market. And ladies and gentlemen, remember the SDC. So for next 3 years, my take is this: probably you should probably look at the US stock market at least right on down until Dow Jones hit 30,000 or S&P hit 4,000. Then if you can, make sure you know how to do short sell. Because there's a saying in the Wall Street, when stock price go up, it's like climbing staircase. But when stock price drop, it's like jumping out the window. That's why remember, 2008, I did a lot of short selling. That's where I made my first pot of gold, because stock price drop, it dropped very fast. Also, my take to you guys is learn how to do short selling, especially in bear market. That is very important. All right, so next I'm going to touch on the next big trend that I see is the D, which is, what is it? Is what I call the US dollar. Also, next few years, my forecast is we are going to see very strong US dollar rally. A lot of people out there, they will say, no, Derek, I thought with Federal Reserve doing so much QE, when they printed so much money, so US dollar should drop. Why you still say US dollar is going to strengthen? Also, ladies and gentlemen, I just want to say this. There are a lot of myths out there. All right. A lot of you guys probably listen to CNBC, Bloomberg, all these analysis or analysts or so-called economists. They say that probably US dollar is going to drop, all these things. But my take is this: based on the study that I do, that means cycle analysis, because I go back and research a lot of past historical data, it's showing me that US dollar is going to strengthen. In fact, what is going to happen going forward will be like what happened during the Plaza Accord in 1985, whereby US dollar rallied so strongly until the G5, these 5 countries, Japan, West Germany, US, UK, all these, they gather together and they artificially, yes, they artificially manipulate the so-called the currency to drop by 40%. Because of that, the so-called the yen actually appreciated. Remember, this was in 1985. Yen appreciated. That's why a lot of money went into the US, Japanese stock market and the property market, and finally caused it to, in 1989, to the bubble to burst. In 1989, and Japan went through a lost decade until right now. Also, that's why, ladies and gentlemen, what we are going to see coming is US dollar is going to strengthen a lot. All right. In fact, we are going to see a monetary crisis happening next year or 2022. Remember, ladies and gentlemen, 2022, the 7-year sabbatical cycle. Also, as I do more research, all right, remember 2008, I know something is coming, but I don't know what is it. All right, but 2022, because of all this research I've been doing, I more or less know what is coming already, which is a global monetary crisis together with the sovereign debt crisis is going to be huge. What we are going through right now, COVID-19, probably is just a preview. What we are going through in 2021 and 2022 is going to be devastating. It's going to be as big, if not worse than 2008, ladies and gentlemen. That is where I would say probably we'll go back to the days of 1929. but not right now. We are not going into 1929 right now. In fact, I see the stock market. I'm talking about US stock market, probably is going to, after this correction, is going to continue to go up. Dow Jones 30,000, S&P 500, 4,000. All right, so this is the second thing. Do take note, US dollar is going to strengthen. All right, this is what I want to show you guys. The next will be SDC. Remember, C, it stands for commodity. All right, commodity, and specifically, I can tell you this commodity bull run probably may have started already and is going to end around 2024. All right, 2024. In fact, I just want to show you guys, if there's any timing and you members here, you can so-called vouch for it. Anyway, I'm going to show you guys this back to our website. Let's go under commodities. All right, so can y'all see this? On the 10th of May, I wrote, all this in our website, Timing and You website. There's our Timing and You members, they can actually log in to take a look. Let me just log in. I just go to this post to let you all take a look. I say this, I say, time to look at silver for a possible reversal because of extreme high in gold-silver ratio. And I explain, at that point of time, gold-silver ratio, that means you take gold price divided by silver price, it went to as high as 114.77. The previous high for the last 100 years was 99.47 and 97.31, but it overshot. That's why I wrote all this analysis. I say when there's a pullback, because it cannot keep on going up, it got to experience this thing called RTM. RTM occurs every day in the financial market. What's RTM? It means reversion to mean. That means it go back to the mean. That means it has to pull back. Also with the pullback, I say silver tend to outrun gold when the gold-silver ratio reverse. That means gold-silver ratio reverse or pullback. Also, then I even draw the chart, all this thing. That's why I say go and watch out for silver. Also, that was what happened, ladies and gentlemen. Also, then subsequently, for me, I in our website, I showed my so-called Timing and You members. So we went in to buy iShare Silver Trust SLV on the 8th of so-called May, and we went in to buy so-called Global X Silver Miners because I'm optimistic about silver. Remember? Then not only that, I also went in to buy gold, all this thing. And ladies and gentlemen, also this past few days, actually, we are very happy. Why? Because, example, about 1 week later, I went in to grab 17.8% profit of my so-called this mining stock, or 17.8%. I entered at 21.6. I bought at 18.33. I sold at 21.6. So we make about 17.8% profit. And subsequently, this few nights, we have been taking even more profit from our silver and gold stock and ETFs. Like for example, another 17.6 profit. All right. And furthermore, another 17.5, 15.3, and 12.3 so-called profit in all our various gold and silver mining stock as well as ETF. All right. All this, I tell my Timing and You members way beforehand. Also, I prepared them. So a lot of us are already in, and we are grabbing this kind of 17.8%, 17.6%, 17.5%, 15.3%, and 12.3%. Probably in about 1 or 2 weeks to make this kind of return. And so many of them. Oh, why did I call for it, ladies and gentlemen? Because this is something that I want to share with you guys. apart from the gold-silver ratio, the extreme high in the gold-silver ratio, because in April, all right, in our newsletter, because I also published the dynamic cycle chart in our newsletter. Can you see 7 of them for Dow Zone, for US dollar, for oil, for gold, for silver, junior gold miners, as well as US 10-year Treasury. So let's look at gold. Also, for cycle chart of gold, crunch on the 29th of April, we can see the cycle chart is calling for a turning point. Can you see turning point around mid of May? That's why we entered to buy gold and gold mining stocks. Also, the next turning point probably will be around maybe mid of June. That's for gold. Then for silver, the turning point for silver, as we can see, which is here. If we scroll down, is also around mid-May. So that's why with the extreme high in the gold-silver ratio, I say based on that, and because I know the turning point is around mid-May, so we combine both of these. That's why we went in to buy a lot of gold and silver, be it ETF or even mining stocks. And because of all this, that's why we end up making 17, 15%, and even 12% profits for the past 1 or 2 weeks. In fact, this few nights we are taking profit. I still got some position because the turning point is coming soon, right, in June, and probably I'll be taking my remaining profit. Then this gold and silver trade will be off. But I can tell you, ladies and gentlemen, from now until 2024, we should be seeing commodities, be it gold or silver, even oil, or even the soft commodity, wheat, corn, all this is going to rally until 2024. Why do I know that? Because I do cycle analysis. That's why I can do forecasts, not to the exact day, but roughly plus minus a few weeks or months. Right? I know what is going to happen around that turning point. I know what probably by when there's going to be a turning point in the prices, but what event is it? For that, I'm not God, so I don't know. But in terms of so-called time, I know the turning point. This is what I can do because of cycle analysis. All right, so let me just go back to my slides. Okay, so yeah, so until 2024, we're probably going to go through a commodity cycle. In fact, I believe it has started. That's why we are Timing and you and members and me, we are already in it, and this few nights we have been taking profit out of it. And I do see that this commodity bull run is going to continue to run. All right. So, ladies and gentlemen, so what I can say is this: 2020 to 2022 is going to be like a dark tunnel. In fact, early this year, when I have a so-called meeting up, or even a Chinese New Year gathering, or even last year during our yearly gathering, I already told my Timing EU members, the next 3 years, that means 2020, 2021, 2022, is going to be the most fearsome 3 years of the sovereign debt crisis, and we're going to have a global monetary crisis. All right, so what I want to say is this: we are like the so-called boat here. Currently, yes, we are experiencing a big wave because of COVID-19. But the fortunate thing is all the central bank, all the government are doing what they can, print money, come out with rescue package to help us pull through this COVID-19. But ladies and gentlemen, I keep on saying, I'm not particularly worried about this COVID-19 because this is a health crisis. All right? But I'm more worried about 2021 and 2022, whereby you have a sovereign debt crisis, or SDC, plus GMC, which is a global monetary crisis. What is SDC? It's actually a bond bubble, or it actually started in 2015. It should end around 2022. just to let you guys know the global bond market, the market cap of the global bond market is 10 times bigger. 10 times bigger than the global so-called stock market. Look at what the central banks are doing right now, ladies and gentlemen. First, since 2014, Bank of Japan and European Central Bank, they have cut their interest rate until negative, correct? That's why there's a lot of negative yield bond out there. Why? Because ECB and Bank of Japan, they keep on buying up their bonds. Why? Because their economy is not doing well. There are not a lot of investors who are interested in their bond. So that's why they end up buying up their own sovereign bond. Sovereign means government. So they end up buying their own government bond. In fact, ECB bought up 40% of their own government bond. Bank of Japan bought up 70% of their own government bond. Or even right now, as we can see, Donald Trump also wants a negative yield. All right, that's why he's forcing Federal Reserve. Or that's why the interest rate, if you look at the 10-year US Treasury yield is coming down. I'm not surprised. I will not be surprised if US go into negative interest rate. But ladies and gentlemen, we need to understand this. Bond price and bond yield is inversely correlated. That means when the bond price go up, its yield will come down. Or inversely, vice versa. When the bond price go down, the bond yield will go up. Yes, the whole world central bank is now trying to suppress the short-term interest rate, ladies and gentlemen. They are suppressing. That's why Bank of Japan, ECB, they go into negative yield. Think about it, ladies and gentlemen. Negative yield, negative interest rate is something that is unhealthy, abnormal. And yet Federal Reserve is going into a direction also. My cycle analysis tell me interest rate is going to turn up soon already, probably next year. Also, once it start to turn up, ladies and gentlemen, remember, interest rate or yield start to turn up, the bond prices will drop. Think about it. Now, Federal Reserve, do you know they are buying out a lot of bonds? Because there's a dry up of liquidity. They need to supply liquidity into the market. That's why they are buying up a lot of bonds. Be it treasury, be it corporate bond, even junk bond they are buying. So ladies and gentlemen, think about it. Now interest rate historical low. Later on, as the interest rate start to turn back up, all the bonds inside the ECB, Bank of Japan, and Federal Reserve, all the bond inside their portfolio will start to collapse. Their portfolio is going to be smashed. Ladies and gentlemen, this is really the one that's going to shake up the global financial market. Because like what I mentioned, the market cap of the global bond market is 10 times bigger than the market cap of the global stock market. It's going to be devastating. Then when that happens, I will say we'll go back to the 1929 Great Depression. This COVID-19 is not yet, it's just a preview. To me, COVID-19 is just a needle. Or as this bond bubble get bigger and bigger and bigger, finally you will hit this needle and you will pop. And I believe based on my analysis, this bubble is going to pop next year, 2021 or 2022. It's coming. It's coming. That's why, ladies and gentlemen, I hope what I shared in this webinar is I've shown you guys, I went through for the last 21 years, different cycle or different events and crises. And very fortunately, I learned about cycle analysis or CA in 2007. And based on that, I'm able to do projection until right now. And right now, what I see is 2021, 2022, we are going to have this sovereign debt crisis together with the so-called global monetary crisis. It's going to be devastating. It's going to be worse than 2008. So that's why going forward, my take to you guys is, remember these three things. If you want to protect your wealth, or probably you should look at maybe trading the US stock market, holding some US dollar, as well as participate in the commodity bull run, which probably will have started. And me and my timing and new members, we are already profiting from the recent rally in the gold and silver. All right. So I think with that, I've shared with you guys what I see is going to happen for next 3 years from 2020 this year until 2022. So probably I'll hand the time back to George and we can do some Q&A. How about that? So back to you, George.
Thank you, Derek. So let's jump into some questions. Let's start with a question that based on what you talked about more from the beginning. So you said this is about RRI. The question is, will we go to red zone first before the RRI drops to below 60? Will it go to the red zone first?
Yeah. So this is my so-called RI. We actually touched the red zone in 2018. Also, it came down. If you ask me, no, I don't know whether we touch the red zone or not, because this is not my personal opinion. Because I explained to you guys how I came out with this RI. Like what I mentioned, there are 14 major CATA plus FA indicators, and within these 14, there are 47 sub-indicators. I'm going to add even more indicators. I'm in the process of doing research right now. All right, I'm going to add more to make this RI even more powerful. All right, this RI is not my personal opinion, because how me as one person can go and monitor 47 variables? Impossible. Not possible for a human being. Like what I say, I'm an ordinary person. Remember, I only got a pass in, I didn't even have first class. Also, it's important for human being to so-called monitor 47 variables. But once I take all this data, I put into my software, and this RI chart, it takes on average 1 hour to crunch all this data to come out with this black line over here, my RI line. So whether we go to red zone, I don't know. It actually depends all the 47 data, the data points. In fact, it's more than that. When I put into the software, then it come out with something objective. Because, ladies and gentlemen, we human beings, we have our own thinking. So whatever we come out with, we will not be objective. But this RI is objective. It has no emotion. It don't care the oil price come down or go up. It don't care all these things. It will just take all the data that I feel is important, generate it, and crunch out with this RI. All I can say is it has touched the red zone before. Will it go back to red zone? May or may not. But what more important to me is when it will break this red line or this 60 mark over here. Once it break it, and once there is a so-called 60%, 20% drop in the so-called US stock indexes from the peak to a trough, then I'll call for bear market. And me and my Timing and You members, actually I'm preparing right now for the bear market. That means during a bear market, how are we going to short sell? What are we going to short sell? I'm preparing all this for my Timing and You members already. Also, this is my take for our RRI. Okay, so back to you, George.
Thank you, Derek. So let's move on to some questions on the stock market. So one question is it because you said that the S&P, you said it will hit 4,000. So do you think it's a good idea to long S&P until it hits 4,000?
Like what I've mentioned, we are probably going through a correction, and this correction may last till June. So maybe there's a chance for us to get in at a lower price. So if you ask me, I'm still watching, I'm not entering yet. Also, once the time is ready and the technical aspect is ready, then I'll enter to buy, but I'm not doing it right now. Like what I say, we are probably going through a correction, like what our cycle chart is telling us. All right?
So I think you more or less answered the question somewhat, but the question is, if you see a continuous bull, why are you taking profit now? That's the question.
If I see a continuous bull, why am I taking?
This is for commodities, because you're saying that it's going to rally, but then why are you taking profit recently? That's the question.
I'm using cash to buy. So the thing is, if I don't come out, I cannot take my profit out. That means I'll keep on rolling. So I rather take my money out so that later on, I can use this money, go and buy and other things. You get what I mean?
I think the question is more like, because you're saying it's going up, but you take profit now. Now you take profit, but you say that the commodities will be rallying long. Why are you taking profit now for the commodities?
Remember, ladies and gentlemen, remember, let me show you guys my cycle chart telling me for silver, this silver cycle chart, the next turning point is around here. Is probably in June. This for silver. For gold, the next turning point is around June as well. So I know a turning point is coming and the price may drop. So along the way up, I will just take profit. This is what traders do. Of course, you can hold if you feel that this will continue to go up. You can do. For example, gold. I have physical gold. I never sell my physical gold. All these that I exit are ETF or paper asset like ETF or gold, silver mining stocks that I can enter, exit very fast. But for my gold and silver physical one, I'm still holding on. I'm not exiting that. That I'm going to ride through until probably 2022 or 2024. But for paper gold, I rather come in and out because I'm a trader. All right, so that is how a trader thinks. All right, I hope I answered the question, because our turning point is showing us it's probably coming already. So that's why I exited to lock in profit. Anyway, it's a very good experience to lock in profit, then go and buy the things that you like. Trust me. All right, it's a very good feeling. All right, so back to you, George.
Thank you, Derek. So this question comes from both Facebook and also on Zoom. So what's your opinion about the US Senate passing a bill to delist Chinese companies from the US stock exchange? Is it still safe to invest into Chinese companies in the US stock exchange as a result?
First, I just want to say, why is the US doing all this? Especially Donald Trump. To me, I think probably Donald Trump and his gang may not have handled this COVID-19 pandemic very well. So they are trying to divert the whole world's attention away by finding an enemy. So who is the best target? China. So that's why they started the trade war in 2019, right? Then we had a phase one, they signed the phase one, then we thought everything okay already, then we have COVID-19. Also now he's getting back on COVID-19 and he's blaming China, all this. And then for the Chinese company, probably it's because of this company called Luckin, the coffee, because of the how they do accounting, maybe they blow up the numbers, all this thing. So they find fault in all this. So to me, actually, US, frankly, or Donald Trump is afraid that China is going to overtake US, because US right now is the world's largest economy. They are afraid to lose the number one throne to so-called China. But my cycle analysis tell me there's actually out there a 510-year dominant cycle, world dominant cycle, 510 years. Or the so-called the economy power has shifted from the west, which is Europe, US, to the east, especially that means China. My take is this: by 2032, China will overtake US as the world's largest economy, whether you and me like it or not. Or Donald Trump can do whatever he wants. Anyway, he just want to win his second term. Or he can do whatever he wants, all right, but he cannot fight so-called the free market. He cannot fight history. He cannot fight cycle. Also, to me, it's a stupid thing for them to do, because to so-called not list all these Chinese company on the US stock market. Well, they can always list in Hong Kong. Or even good news, they may come in list in Singapore, even Malaysia. So actually good news for us. Also, to me, they are all, US is just trying to get back on China. Donald Trump is just trying his best to win his second term to cover up for his incompetence in controlling this COVID-19 pandemic. That's my view. All right.
Thank you, Derek. So let's see. I'll take a few more questions. Can you comment a bit on the Dow Jones in the next few months? And do you think the ETF UDAO is a good ETF to track the Dow Jones?
I don't want to talk about individual stock or ETF. All right. I won't be talking about that. But what I can show you is for Dow Jones, my cycle chart is telling me this. This is a cycle chart for Dow Jones, as you all can see. Crunch on the 29th of April. I'll be crunching our latest cycle chart, all right, soon, because it will be in our May Timing and You newsletter, and I'll publish it probably next week. But based on this cycle chart that's on the 29th of April, the next turning point is around here. That's worked out to be in around June, as we can see, around June. All right. So my take is this. That's why I say, be it S&P, the cycle chart S&P, or even the cycle chart of Dow Jones, is calling for probably a turning point around June. That's why I say we are going through a correction, probably until June. But we should be seeing a low in the second quarter, or probably June, and we should see the market keep on going up. From there, probably until Dow hit 30,000, S&P hit 4,000. All right, so this is my take about general market, individual stock or ETF, because this is a public talk, I'm not going to talk about it, but I'll be talking about this probably during our weekly market update that we do for our Timing and You every Sunday night. All right, Ken, so back to you, George.
Thank you, Derek. So let's just take one or two questions on commodities, and then we have to wrap up for tonight. One of the questions is commodities bull run you mentioned is until 2024. Do you consider Bitcoin a commodity, and would it rally as well?
Okay, a lot of people I know, they say Bitcoin is a store of value. Sorry, I don't agree with this statement. Or Bitcoin is a digital gold. I don't really agree also, because a store of value or digital gold, you cannot see drop from 20,000 drop to a few thousand. This is not what a store of value should be. You understand what I'm saying? So if you ask me, Bitcoin is to me asset class that's good for trading. All right, and actually I've been watching Bitcoin. I have some Bitcoins. I am watching Bitcoin because recently we have a halving. All right, so this few days, in fact, Bitcoin has been so-called retreating the price. All right, I'm looking to add more position of Bitcoin. I'm actually watching, but the thing is, my thing is this: I'm not going to put a lot of money in Bitcoin or crypto, because to me, they are just something, a digital asset that is very good for trading. We should be treating it as a so-called asset class that's good for trading. All right, it may go a lot higher. Bitcoin, maybe some say 100,000, some say 200,000. I don't know. All right, it may or may not. But based on historical data, since Bitcoin was born in 2009, usually after halving, it will rally. For example, the second halving, from the low point until 20,000, it actually went up 28 times. Also, that's why recently I'm looking at Bitcoin. I haven't executed yet. So if you ask me, I will treat Bitcoin as a very small part of my portfolio. My main bulk of my money will still be in stock market, commodities, not bonds, because I already mentioned we are going to see the sovereign debt crisis. So I'm not going to put money in bonds. I don't have Singapore properties, and I rather put more money in US stock market, commodities, as well as US dollar. or a little bit in crypto, especially if you ask me, Bitcoin, because it's a blue chip of all the cryptocurrency. So this is how I view Bitcoin. All right.
Okay, thank you, Derek. So if a question is, if a person is not exactly a trader, right? They're not trading in the markets, but is it a good idea for them to just start accumulating US dollars and gold from now until 2024?
Gold and US dollar is definitely not until 2024, because I already say this global monetary crisis is going to happen around 2021 to 2022. I believe US dollar is only good enough for the next maybe 2 to 3 years. But if you want a longer term currency, we should be looking at renminbi. All right, because as what I say, China is going to be the world's largest economy by 2032. By then, its currency, which is the renminbi, will have widely distributed, all right, around the whole world. So we should be holding the so-called renminbi for long term. Remember, my long term is 10 years or more. It means 10, 20, 30 years. But US dollar probably is for the next few years. Gold, I always say gold is a so-called a good asset class to have in our portfolio. All right, especially for Singaporean. Do you all know that we can actually use our CPF ordinary account, 10% of it to buy gold? This is what our government allow us to do. And if we buy physical gold in Singapore for investment purposes, we do not need to pay 7% GST. Do you know that, Singaporeans? You don't know, right? Because 2012, our Singapore government already removed the 7% GST when we buy or we invest into gold for investment, not jewelry, but for gold bar, gold coin, all this, we do not need to pay 7% GST. So if you ask me, I think we should own gold. If you don't have so much capital, probably have some silver. It can be in physical form. For example, I own physical form, I own silver form. Physical will be the gold, the bars, coins, all this. I have a gold ETF, which is listed in Singapore Stock Exchange. I also got, earlier I showed you guys all the gold, silver mining stock, all these things. Those gold and silver mining stock is good for trading. For example, 1 to 2 weeks, I can make about 17%. Why not? So while a lot of people are losing money, I'm taking 17%, and now I can go and do, I know a lot of people are suffering out there. I'm donating to our Timing and You Foundation, one of the charity house. Well, I'm making money, I do donation to a charity. So it's a very good feeling. All right, so so that's my thing about gold and silver as well as US dollar. All right.
Thank you, Derek. So you mentioned a bit about China's cycle earlier, right? That it would be the world's largest economy by 2032. So does cycle also indicate how long would they be the world superpower? Is there such a cycle? No.
No. It's going to be a 510 years. China will rule the world for a long time, like what happened for US and UK. All right, that is for sure. So ladies and gentlemen, if you don't have any China friend, please start to make China friend. If you don't know how to speak Mandarin, please go and learn Mandarin and make sure our next generation know how to speak Mandarin. This is something very important. That's all I can say. All right.
Bonds. What would trigger the increase in interest rates next year? Given the amount of debt that the US has, what would trigger the increase of the interest rate?
Like what I say, everything has a cycle. Whatever go down has to come up. All right. It is only natural. All right. So for, if we talk about the US 10-year, 30-year bond yield, it actually has a so-called a 64-year so-called cycle. That means from the trough, hit a peak, then back to a trough, is about 64. So we divide by 2 will be 32 and 32. Also, what happened is the 30-year US Treasury bond yield has reached a peak in 1980. So we add 32 to it. 1980 plus 32 will be 2012. So around 2012, we are starting to see the bottom. And from 2012 going forward for the next 32 years, by probably 2044, we should see the interest rate slowly go up. It's not going to up in a one straight line, but it's going to turn up. That's for the US Treasury bond yield 30-year. Then for the high grade so-called corporate bond, there's a 60-year so-called cycle, which is also calling for a turn soon already, ladies and gentlemen. So all signs point to me that in terms of cycle, it's going to turn. In terms of cycle, in terms of being fundamental, ladies and gentlemen, there's no way the central banks or even Federal Reserve can keep on suppressing the interest rate. They can only do it for a short term, but ultimately they cannot fight the free market. And think about it, ladies and gentlemen, if they keep on suppressing the interest rate, what will this create? This will create a pension fund crisis. Why? Because pension fund, what's pension fund? Pension fund is for pensioners. They are supposed to the pension fund is supposed to put money into fixed income, something safe that can keep on generating income for them. But now with the interest rate so low, they cannot generate much income from the bonds. All right, and do you all know, ladies and gentlemen, the US at the 401k is something like our CPF or Malaysia EPF. It is required in the 401k to go and buy US government bond. Do you know that? Singapore, we don't need to buy Singapore bond, right? But it is a requirement for 401 to go and buy US Treasury. Also, my take is this: they keep on suppress the interest rate, then the pension fund don't have income. They cannot so-called fulfill the obligation to the pensioners. This will create a pension fund crisis. That means if the interest keep on lower, a lot of pension fund will collapse. When pension fund collapse, what will happen to a 401 of all the retirees? So that's why I say, be it in terms of cyclical or be it of fundamental, interest rate have to turn up. If not, we will end up with a pension fund crisis. Actually, now all the central banks, be it Fed or Bank of Japan or Federal Reserve or even European Central Bank, they are stuck. They are stuck between a hard place and a rock. They suppress interest rate, they don't increase interest rate, we'll have a pension fund crisis. They increase interest rate, then we have a so-called bond crisis. But naturally, everything like what I said, goes on, has to come up. That's why in the end, what will happen is interest rate will go up, bond prices will drop, and that's what will result in a sovereign debt crisis, which is effectively a bond bubble. All right, which I've been telling you guys. All right, Ken?
Okay, Derek, thank you very much. Ladies and gentlemen, I believe this is all the time we have for tonight. So we hope that tonight's session that you've actually benefited from a lot of the sharing that Derek has mentioned, especially since that we are so concerned about the coming year and the coming 2021-2022, which of course for a lot of us, it's just around the corner, and we are all in this very important period where we need to figure out not only how to preserve our wealth, but to find opportunities to create wealth, right? Now, Derek, don't mind if I can share my screen.
Yeah,
Thank
please.
you so much. So, ladies and gentlemen, thank you all for being with us until here tonight. Now, I'd like to just highlight to you some of the things for those of you who want to know more about Timing and You. Now, one of the things that you can also we have a lot of questions today that wants Derek to analyze stocks and analyze the certain markets, right? And it's something that we do, but it's not on tonight's session. So for those of you who are interested, we do run this weekly market update where Derek has been helping members on a weekly basis to analyze the market and also to give them an update on significantly. So this weekend, of course, we are running on Sunday. It runs on Sunday night at 8 p.m. So for those of you who are interested, we will be sharing the link. But the weekly market update, we are only doing the following weekend. Because this Sunday, we are running this Ask Me Any Stock session, which is for members only, right? So But we are running a Ask Me Any Stock session for the public towards the end of the month. So please look out for that if you want to ask Derek to analyze a particular stock that you are invested in. Now, if you want to ask questions about the stocks that you are invested in during the Ask Me Any Stock session, you need to sign up for it. It should be happening, I believe, on the 28th. Correct me if I'm wrong, Victoria. And also, you must come prepared. So you need to come with the stock name, ticker symbol that you want Derek to analyze. You also need to provide your entry date. The rough month would be fine, and also the entry price so that Derek can analyze your stock for you. The stock doesn't have to be in Malaysia or Singapore only, or US stock only. It can be for any stock market as long as it's a recognized and a public stock market as well. So you can ask for Hong Kong Stock Exchange, HKEX, SGX, Bursa Malaysia, the NASDAQ and so forth, basically all. So feel free to ask during that session. Now, for those of you who want to get updates that Derek has pre-analyzed and shares with our community, do join our weekly market update. So we'll be doing one next Sunday at 8 o'clock. The link will also be shared. So you can sign up for those things that are happening in the following week, right? Now, for those of you who want to know more about the membership of Timing and You, if you want to know more about membership of Timing and You, right after this, there will be a link where you can join me, where I will run you through what we do for the Timing and You members. So it will be a short session where I will just run through with you the entire Timing and You membership. So for those of you who are interested, the link will be in the chat box. You can join that Zoom session immediately after this session. I will be there and I will go through maybe 10-15 minutes to quickly talk about the session of the membership that we have been talking about throughout this session. And of course, for those of you who are on Facebook, the link will be there as well. So for those of you who want to know more about how you can go along with Derek and us and our team and this community of ours, which we have more than 400 over across Malaysia, Singapore, and Indonesia, how you can go on this journey together with us to really beat this next recession, right? I really encourage you to just stay back for a little while more where I go through the membership details with you. And with that, ladies and gentlemen, I'd like to pass the time back to Derek to do a closing remark. Derek?
Right, Ken. Let me just go back to my slides. Also, ladies and gentlemen, I would just like to wrap it up is do take note, starting from this year until next year and 2022 is going to be dark and cold. What we just gone through or going through right now, COVID-19, is just a preview. Next year and 2022 is going to be worse. But like what I say, don't worry, whenever there's a crisis, there's opportunity. Like right now, like for example, recently, we participate in gold and silver and we make good returns. I believe along the way, for the next 3 years, with my experience for the last 21 years and with my research on the cycle analysis, I'm able to guide my Timing and You members, not only protect, I think protecting our capital is very important, as well as to make profit from this crisis. Remember, every one of us, we have 2 to 3 times in our lifetime that can make a lot of money that will change our life. I believe from 2017 until 2022, that's why I coin it WRO, wealth redistribution. This is a period of time whereby there's going to be a redistribution of wealth. Will you want to be the one that is going to benefit from others who don't know what's happening and they suffer? All right. If you want to be one of them, so probably you can join George later and be part of Timing and You committee. All right. So before I end, I just want to say this. I encourage you guys to add me in Facebook. You just key in Derek Tan. Please don't add me in my personal page, in my personal account. Like my page. Please like my page. You key in Derek, D-R-I-C-K space T-A-N. You see gold and silver. That's me. Like my page. Why you gotta like my page? Because I heard from the conversation right now, just now, some of you guys may want to buy gold and silver, right? And keep it, right? My take is, please like my page so that the next time, once you see this gold and silver picture is taken out, that means I will have sold my physical gold and silver. Then maybe you say, oh, no more gold and silver. Then you probably better go and sell your gold and silver already. And also, please like my page so that you will be notified. All right. So this one, another one is also please like our Timing and You page so that whenever there's any more webinars or public talks, or hopefully we're going to do physical talks again, or any new update that I feel is important, or any new turning point in the market, I will post in our Timing and You website, Facebook page. Also, please like our Timing and You Facebook page as well as my Derek Tan Facebook page. All right. If not, ladies and gentlemen, I hope you guys have learned something tonight. I just want to check. Have you all learned something tonight? If yes, can you just key in Y? That means stands for yes. If you learn something, can you just key in Y? All right. So that at least I'll know. All right. Very good. So it's good that I hope this 1.5 hours is a good time spent with you guys. And ladies and gentlemen, I just want to end with this. So, all right. May the timing be with you. Can you all see the slides actually?
Yeah.
All right. So may the timing be with you. Stay safe and I'll see you guys soon. All right. Take care. Please catch up with Josh in the next room. All right. Take care. Bye-bye.
See you soon. Bye.